Good day, everybody. It's Sunday, and here is our put to call MMTs. You can take a screenshot and then load it in your direct access platform. We've got 923s right here at various strike prices. One thing I can say is I will throw in a 510. I'm throwing in a 510 put as well. That's $15 below the current closing price. Page, save, and as far as the price line chart goes, we can see here on a daily that it's only 62% here, but we can see that price line is having a problem at the 10-day simple moving average, but it's got a lot of support in here, so it's going to be range bound. And we had in the last highs over here, it's very important that you know that that high was 539, and that was done on 914. You also want to know that this high over here where it gapped down, which was on 99, that high was 538.04, and the numbers are right here. The current high over here, which is very, very, very important on 915, is 534.70, and the high is lower than the previous high. This high here on Friday is 531. So you can see here, MMTs, where the highs prices are getting lower, and they're still continuing to get lower here. 531 was on 912, and 531.17 were below that. And yeah, the low is only 523. We were very good over here at 508, but nonetheless, we're going to be monitoring how the support levels, the 50-day simple moving average is at 516. The blue line, the 40-day simple moving average, is at 512 as of today's reading. The 10-day simple moving average, which has current resistance, is 529.41, and the 20-day simple moving average is 513.09 cents. And this is going to be that major support level where the stock has refused during this phase. It has yet to break below those key moving averages. MMTs, a 525 put is down here at 22.85 on the low, 24.40 on the close, but back over here on 822 they were so damn inflated. And this is what happens whether it's a call or a put. They were $90 and they hit a low over here of $20.90, and we're in that deflated area as far as the 525 put goes. We can go lower. Price line's very volatile, so if it breaks higher, they're going to bring these down lower. And on the flip side over here, though, when you take a look at your call contract, your 525 call, here was the high, $45. And 1, 2, 3, 4, 5, 6 days later, even the call got down to a low of 24. They're not inflated either, but they can get more deflated if price line breaks down below the 525. These are going to go down in value, and these are going to start ticking up in value. And Amazon did close right around the 525 level, and so we're working with that strike price. Some of the other strike prices that we're looking at would be a 530 call here. That is a 530 call that is here. I'm sorry, you can see the call contract was hot, the high on this up and out of the money. We'd be looking at trading that. That high was 41.90, and the current low on that contract was 21.50. Now, if Amazon holds that channel support on that daily chart as support and wants to break back toward the highs, these would be buyable up and out of the money. That's the up and out of the money call for a breakout. Vice versa, the 540 call, which was on the high cycle of $36, and it's pulled back to the low of $16.96. This is where the deflated price was at $6.80. They were great trades. And these 540 calls when Amazon was going up and making the highs. But when they get it, things change. So we're going to be looking at if Amazon if Priceline holds that support level at those daily moving averages, we would come down here, and then if we start to breakout process on an intraday level, we know to be buying this 540 call for a trade up and out of the money, and we're just covering those. On the other hand, on the flip side, when you take a look down here at a put option, which is high price, but the put option over here in 822 was $67. They're not so expensive now. And that's that $500 put. Yeah, they can drop down lower over the next several days, and we're going to be watching that. It's in October, $500 put. And we're going to see where this wholesale side of the market, that was inflated. We're at a deflated zone. We can go more deflated depending on how we want to break higher, and we can be getting the calls. This put option is, can go cheaper. We will find out, but we're going to watch that way below the money. And they report earnings on November 8th. And once again, starting tomorrow on the weekly, we're going to watch where the current strike prices are. We're going to watch the frontline month, which will be the October one, 10/22. And we're going to be watching the 525 put here. And let us not forget the 525 call here. The 520 put is below the strike. We will also monitor the vitals of the 520 call. So I've got a 520 call and a 520 put. A 520 call and a 520 put needs to go here. So we got slightly $5 below. And once again, the $5 above the strike price for the call and $5 in the money put. And I'm going to go to page save, and we're going to be monitoring this as Amazon trades through the next 5 days starting tomorrow morning. And what side of that market, because Priceline has great intraday moves.